Welcome everybody, this is the speculator at Take Your Profits, and here recording another video series for my post-trade operations, where I take an analytical look at the recent trade decisions I've made. In this particular case today, I'm going to be looking at trade number 90, which was a long entry in the New Zealand dollar market, which was actually for a loss. It's really my only loss recently in the most recent series of trades, which is pretty good. Wasn't that bad of a loss. It's kind of was actually a bigger loss that I'm actually accustomed to taking, but you know, it happens. So trade number 90, this is the chart. It was a trade on the 4-hour chart. Let me make this a little bit bigger so you can see my set strategy. My protective stops were at 79.30. My entry was at 80.64. And my initial profit target was at 83.35, with secondary targets at 84.85. And if you notice, there was actually a larger, I guess this would have been a pennant formation. No, actually no, there's a larger, like a larger channel that had formed here. If you can see in yellow, the trend lines. And within that channel is where I saw my Gartley pattern. If you can see, here's my X, A, B, C, D pattern completion over here at the bottom trend line, which is what I liked about this trade. If you could see, my AB leg retraced to this gray line here is the 618 of the XA leg here. And this B to C leg retraced to this green line here, which is the 50% retracement of AB. So I had a 618 retracement of my XA, and I had a 50% retracement of my AB, which then, once I took the extension off AB, we found that the 141.4% extension and the 127, well, the 141.4 is an inverse extension off of BC, but the extension off of AB, the 127.2 extension, was confirmed at the 886 retracement of XA, which is where the ABCD harmonic completion completed at, and it's where price eventually completed at, leading me to take the long entry here for trade number 90 at the 8064 level. 80642 to be exact was my exact entry, playing a retest off of this level of market structure that coincided with this bottom trend line here in the market. Also, you know, this overall Gartley was a Gartley that could be identified on a daily chart, so it was a higher time frame pattern recognition. Really, why I like this trade was the fact that I waited a little bit for this secondary pattern to complete. Let's call it this pattern within the larger pattern, if you will. Which was a butterfly pattern completion at this level here, which was a butterfly pattern completion that whose ratios confirmed at the 127.2% extension of this particular XA leg, whose AB extension at 1618 confirmed that once price hit this level, it would be you know, probable, high probability level to enter at. So I really like this. This was really a play off of a pattern within a pattern type strategy. which has proved to be pretty successful for me in the past. So that's pretty much what the gist of this trade was. Let's go into the Pro Trader dashboard so we can see the actual characteristics that were graded on this trade. Had a risk profile of 2.02 based off the set strategy, based off where my protective stops were placed and where my initial profit targets were measured out to be a probable area to take profits at. Because of the account equity size and because of the technical score that was graded, measuring the risk parameters that I define on every trade, the mathematically defined suggested position size was a full one contract trade for this particular strategy. There was this trade scored points for price being having been trading at a major level of structure. Being that price did trade at an area where the previous market harmonics provided Fibonacci ratios that confirmed the area as an area that had a high likelihood of reversal. This trade also scored points for ratio confirmation, as the ratios did confirm that price was trading at a high probability area to reverse. This trade did have a 50% retracement. It scored points for having an ABCD harmonic completion, which means that the AB legs and the CD legs of the downward move were equidistant in time and in price. The retracement of the BC leg within that overall ABCD harmonic pattern retraced to a 50% retracement. However, I only score 382 or 618, so the 50%, the ABCD patterns with 50% retracements, I classify them, I group them into the 382 ABCD trades. This particular trade also scored points for the Gartley, for trading at a Gartley Chi-Chi-2 with 886 retracement of the XA leg. And then going more into talking more about that pattern within a pattern concept, this trade also scored points for forming a butterfly pattern completion that completed at a 1618 extension of the AB leg, that retraced to the 786 retracement of its XA leg. This butterfly pattern was actually completed on a smaller time frame within that equidistant CD leg move of that overall larger ABCD harmonic pattern completion. So I do look for opportunities that exhibit patterns within a pattern, as it can be seen those trades tend to be higher probability trading opportunities. However, because of the risk allowed with those trades, after having taken the loss on this trade, this particular group has now produced, even though it wins a higher percentage of time, because of the amount of risk I have chosen to accept for these particular trades, the small amount of times that it has lost, it has now made this overall strategy a net loser, whereas before taking this trade it was a net winner. So we're going to have to keep trading this strategy to see how it performs over a longer period of time. I have a feeling that we can improve this profit and loss ratio here. quite substantially. Looking at the details of this trade was actually taken on last week Wednesday, September 21st in the New York session. It closed the following day. It's a pretty quick trade for the loss on the long entry in the New Zealand dollar market. Like I said previously, it was decided on the 4-hour chart, and this trade did not go as planned, even though we did have a highly probable pattern within a pattern type scenario, and the trade did not go as planned. It closed out as a loss. And here is the set strategy that was used: stops, entries, and targets on the full position that was dictated by the money management rules, for a total loss of 134 pips on this particular trade, decreasing the amount of pips earned on the target 1 exit point from my overall trading strategies, and my pip gains still for the year are in excess of 6,500 pips. So going back to the chart, that's what was planned. Now going into the completion of this trade, we could analyze where it actually failed at, and we could see the market never even made an intention to go in the expected direction of the trade, and just continued to go against the position and went against the and took out the protective stops for the loss of 143 pips. Now going into the second question of this trade is, what could I do to improve this trade? What steps will I take for improvement? Well, looking at the previous trades, and just let me go into a previous chart to try to find a good example of what I'm kind of looking for here out of a winner. But typically, if you could see here, trade number 89, which was a winner, once the market was entered, you can see the market never really made any decisive moves against this long entry. You know, we might actually, this shadow was before the entry. The entry was here, but the trades I'm looking for are trades that are going to immediately go in my favor to take out targets. So bringing that back to this particular scenario, we can say that we can improve on these trades, that once we see a trade that immediately goes against my position, we could immediately start reducing stops to 50% and start looking for a trend continuation trade scenario in order to jump on the trend going in the opposite direction. Because really, if I enter a trade, even though all the ratios are coinciding with good levels of market support, if the trade just blows through that support immediately upon entering the market, then I immediately know, and I should immediately have a reaction that that just the plan isn't really going as intended, and I should be looking for an exit or a reversal of position. Whereas if it's a winner, typically the market either stalls and stays there before going in my direction to take out the winner, or it just stays there allowing me to reduce my stops. So again, in order to improve upon this trade, I'm going to say that the best way to improve is to look at the behavior of the market upon entering the trade, and if the market doesn't behave as expected, then it's time to exit the trade. That's the post-trade review for trade number 90. Thanks for watching. Take your profits.